Hey everyone, this is Sil, and this is our latest edition of Highlights, which is Steve's key trading and active investing strategies that we'd like to share every once in a while. So I want to focus on what we have an upcoming intraday chart mastery coming up on April 29th. And so I want to essentially just show you a few examples of what we're going to be discussing in that exact course. Here's one great example of the things we're going to be covering in the intraday course part 2. So this is trying to get perspective. Are you a 5-minute trader? Are you a 30-minute trader in terms of charts? And which ones should you be looking for and at as well? How many time frames should you really be focusing on? And even I've been in the trap of too many time frames and then getting confused. So let's put in perspective. We have a 5-minute perspective here. Is it an uptrend or a downtrend? Are we going long or are we going short? Take a look. We have what was a breakout over here based on a polarity, and this was essentially what appeared to be a breakout to the upside, as you can see with that large green candle. Then all of a sudden it looks more like a falling off the roof because it starts to fail to the downside. So was it an uptrend? Was it a downtrend? Or are we going kind of sideways? So if we go one time frame higher in a 15-minute chart, we're going to see that actually if this is actually already in a downtrend, and at best it's going sideways based on the second half of the chart on the right hand side. So there is the resistance area, there is the polarity that's present, there is that falling off the roof that we saw on the right hand side. Had we looked one time frame up, we probably would have been able to say, okay, this is not an uptrend. This is more likely sideways at best in a range and going to go likely to the downside because the resistance was still substantial and the sellers were still very much in control. We go up another time frame, a 60-minute perspective. Now what have we got? From a standpoint of here, sideways originally, but now take a look at that last third. We have a huge decline overall, stair-stepping its way down and down, finding another polarity. And so this is actually in a downtrend, not an uptrend. So again, sideways, uptrend, or downtrends, which is the perspective. Here we go up another time frame to a 240-minute, in other words, another 4-hour chart. Really, overall, this is looking like it's in an uptrend from left to right, and maybe a little sideways with a recent downtrend, but looking like there's a support area, right? So there's the uptrend coming from the breakout above, and recently a few red candles, of course, but overall, again, everything's still coming in an uptrend. We go to a daily chart, and now, oh, there it is again, sideways with a breakout above. There's the rise in a short-term uptrend with a breakout, and support immediately below near 155. So once again, are we in an uptrend, downtrend, or sideways? Which is it? So the bigger perspective on that same daily chart, we look at the same step. We take a bigger step back, and now we're seeing that at best we are in a sideways range. Everything is going, even though there was a breakout at that level, you can now see that there's a whole lot of other peaks and valleys and the pivots that are creating resistance. This is actually perhaps in a downtrend based on an original breakdown back in the month of June. So again, what's the perspective? Which do we use? How do we know where we are? This is literally in a current downtrend, if at best, again, sideways. So looking at all the time frames, daily says sell, 240 says buy, 60 says sell, 15 minutes says sell, 5 minutes says buy. Confusing, right? So again, figuring out what the time frames that you want to trade and then knowing which perspectives you need to be looking at and sticking to religiously so that you don't create confusion. One can always be making money no matter what this perspective is, but you've got to time it perfectly. Wouldn't it be better to just know exactly what time frames you should be trading and then having the most accuracy that way? This is the sort of thing we're going to be covering in our upcoming intraday course, and want to just reiterate that once again. So now let's take one more look at the chart and what area we were actually focused on. So this is the overall longer term version of this, looking at about 6-7 months worth, and you can see this is the area we were originally focusing on that falling off the roof attempted breakout on a 5-minute chart. You can see now the overall perspective is a whole lot different looking at it from this perspective as well. So once again, the Intraday Chart Mastery Part 2 will be coming up here on this coming Saturday, and you're going to be covering some serious insights on investor trading, things that you need to understand regarding intraday charts, as I just showed you in that example. Here are some of the advantages, and some of the biggest ones are really developing much better and greater degrees of patience, as well as the really hidden secrets behind what floor traders are seeing in terms of where stops are, entries, etc., and the precision that you're looking for. And that's why, again, back to the intraday timeframes and understanding that the best of your ability, so the principles behind it again. And we're going to focus a lot on what professional traders are looking at and what they see, and so how we can take advantage of that so we can understand the candle pattern so much better than before. There's so many hidden secrets there that they know that we are not privy to, and I'm going to share a lot of those things with you as well. So get your registration in right away. We have this coming up here. Spaces are limited and we're filling up fast, so please take advantage of this because it's going to be a lot of fun. Hope you enjoyed this latest edition of Highlights. Thank you.